Everyone online is telling you rent in Florida is out of control. But right now, in 2026, thousands of landlords across the state are doing something almost nobody expected. They're paying renters to move in. 2 free months, waived fees, slashed prices. Florida built so many apartments chasing a migration boom that never came back that the state now has one of the most renter-friendly markets in the entire country. Tonight, we're breaking down exactly how this happened, with the real numbers, real sources, and what it means whether you're renting, buying, or holding investment property in Florida. To understand why Florida rent is falling in 2026, you have to go back to the boom that caused it. During the pandemic, hundreds of thousands of Americans moved to Florida in a single year. Demand for apartments exploded almost overnight. According to Redfin, rents in Tampa alone surged as much as 37.8% year over year in 2022, more than double the national rate of increase at the time. Landlords couldn't raise prices fast enough. Waitlists formed for units that hadn't even broken ground yet. So developers did exactly what you'd expect. They built aggressively, based on the assumption that hundreds of thousands of new residents a year was the new normal, not a temporary pandemic spike. That bet is now the reason Florida's rental market looks completely different than it did 3 years ago. Here's where the story turns. According to CoStar Group, South Florida alone delivered 18,600 new apartment units in 2024. That construction wave landed right as out-of-state migration to Florida slowed sharply. The same migration collapse we covered in a previous video. The result, according to real estate data firm HouseCanary, is that rent across Florida is now down roughly 3% year over year statewide, with multifamily oversupply forcing investors into concessions just to hold on to tenants. The vacancy numbers back this up. Statewide rental vacancy is sitting near 10%, according to a 2026 rental market analysis from Manage Casa. In South Florida specifically, median apartment rent hit $2,277 in June 2026. That's 20% below the pandemic peak of $2,850 in June 2022, according to Realtor.com data. Let that number sink in. Rent in South Florida is down a fifth from where it peaked in real dollar terms. The pain isn't evenly spread. Some Florida metros are dealing with genuine oversupply crises. Take Sarasota. Despite being ranked the 18th fastest growing city in the country by U-Haul in 2025, Sarasota's rental market added more than 4,500 new units in a single year, a supply increase of over 10%. According to Apartments.com, 81.8% of Sarasota rental properties are now offering concessions, and nearly half of those are advertising 2 full months of free rent. Jacksonville is in a similar spot. Vacancy there is running around 12%, the loosest conditions of any major Florida metro right now, according to rental market data from Rent Now Pay Later. After significant rent declines through 2024 and 2025, landlords there are still leaning hard on free rent periods and waived fees just to maintain occupancy. Southwest Florida, think Lee, Collier, and Sarasota counties together, is described by CoStar's National Director of Multifamily Analytics, Grant Montgomery, as a market where the advantage remains with renters rather than landlords, who can expect continued flexibility and competitive offers well into 2026. But, and this is important, it's not uniform across the whole state.
Miami is the outlier.
While most of Florida is swimming in empty units, Miami's rental market is tight, with multifamily vacancy running as low as 7% in its strongest submarkets, and rents still posting modest year-over-year growth, according to Manage Casa's 2026 rental report. Fort Lauderdale is another exception, but for a different reason. Rather than oversupply, Fort Lauderdale is facing an actual supply shortfall. Multifamily deliveries there are projected at just 3,300 units in 2026, the smallest annual figure since 2022, according to Marcus and Millichap's 2026 market report. Less new supply means landlords there have far less pressure to offer concessions. Tampa, meanwhile, is showing signs of stabilizing rather than crashing or booming. Home prices there are actually still posting modest growth of 2.5% year over year as of Q1 2026, according to HouseCanary. even as its rental market cools alongside the rest of the state. So the real headline isn't "Florida rent is crashing." It's that Florida's rental market has fractured into two completely different stories depending on which metro you're looking at. Here's the part most headlines leave out. Falling year-over-year numbers sound like relief, but they're measured against an artificially inflated peak. According to the University of Florida's Shimberg Center for Housing Studies, Florida's median gross rent, meaning rent plus utilities, rose from $1,238 in 2019 to $1,719 in 2023. That's a 39% increase in just 4 years. A 3% statewide dip in 2026 barely puts a scratch in that. If your rent jumped 40% during the boom, a few points of easing doesn't undo years of accumulated cost. Renters are getting concessions and slightly softer headline prices, but the underlying affordability gap from the pandemic years hasn't meaningfully closed. There's also a landlord-side pressure keeping rents from falling further than they otherwise would. Florida property owners are facing insurance premiums running more than double the national average. Higher insurance and property tax bills give landlords less room to cut face rents, even in oversupplied metros, which is exactly why so many are choosing concessions like free months instead of permanent price cuts. It protects their long-term rent roll while still attracting tenants short-term. Looking ahead, the construction pipeline that caused this oversupply is already thinning out. As fewer new units break ground across most Florida metros, the excess supply now flooding the market should get absorbed over the next 1 to 2 years, assuming migration and job growth stay roughly where they are. Jacksonville is the market analysts are watching most closely as a potential rebound story, with population projected to grow 11% between 2023 and 2028, and more than 100 new residents arriving daily, according to RealWealth's March 2026 research. If that holds, today's 12% vacancy could tighten up faster than people expect. So here's the real story on Florida rent in 2026. It's not one market, it's two. Sarasota and Jacksonville are giving renters the best leverage they've had in years. Miami and Fort Lauderdale are still tight and still climbing. And underneath all of it, insurance costs are quietly setting a floor on how far any of this can actually fall. If you're renting, buying, or investing in Florida right now, the metro you pick matters more than the statewide headline ever will. That's the data. That's the real story behind the headlines. Welcome back to American Property Markets.